What's up, guys? Welcome back for another episode. This week, I am in way better shape, man. I'm feeling good. I had a single night of good sleep, maybe even two. So we're alive and kicking. The markets, however, have not been alive and kicking. Today is Sunday once again, by the way, the 29th of December. 2024. This is going to be the last stream of the year, last video of the year. So I was thinking of doing a quick annual recap. It isn't really an annual recap, as in I do a pretty extensive annual review of my trading. And I'm obviously not going to go over everything on this video. I just figured it'd be nice to look at a couple of really bad trades and look at a couple of good ones. And also go over a few stats that I have noted down. Again, there are a lot more stats I look at, but for the sake of this video, I have written down only a few. So let me go ahead and go over to the sheet. So this is 2024. I had 346 trades with a win rate of 34%. Now, you don't have to explain this to traders, right? To anybody who has experience with trading, you simply do not have to explain to them why a win rate of 34% is okay. But in general, the people who aren't involved in trading, people who are new to trading, they're really, really focused on their win rate. And you can't have everything, right? You can't have your cake and eat it too. What I mean by that is you can't have a win rate of, say, 80% with an average R of, say, 3-1 or 4-1. It really depends on the way you trade. If you prefer small trades, if you prefer trades where the risk to reward is smaller, you can obviously have a bigger win rate. And the reason for that is really simple. If you're pushing your potential profit, your take profit targets, the more you push them, the more likely it is you're going to get stopped out along the way, or the more likely you're just going to be wrong on the trade. Because it doesn't happen as often that you only risk $1 and you stand to gain $3, $4, $5, $6, maybe even $7 or $8. Those trades just occur a lot less than trades where you risk $1 to win $1, or even 80 cents or $1.50. So it really depends on just the way you prefer to trade. Are you able to keep trades open for a long time? Are you able to manage trades well? Or do you tend to overmanage trades? It's really important to look at some people like to test whether or not managing a trade actively is hurting their bottom line or isn't. However, that is still looking back in hindsight and tweaking things from the past doesn't mean it's going to work in the future. However, with specific cases like this, say with actively managing trades, if you always manage your trades the same way, you can benefit from having those stats and checking that out. But me personally, I can leave trades open for a very long time. I don't get anxious. I don't get nervous. I don't overmanage trades. I think I manage trades pretty good. So to me, it is perfectly fine to just survive within many different trades, and most of them are small winners or small losers, and I can survive in between those to wait for the really big winners. As you can see, my max drawdown was 5%. Which is sorry, I gotta sneeze. Which is the distance from peak to trough, I believe they say. So the highest peak to the lowest low after the highest peak was 5%. Then we get the consecutive winners, 6 winners in a row, which added 7.11% to my trading portfolio, which is significant, and I'm pretty happy with that. I don't have any doubt that some traders look at this and think, well, these are fucking rookie numbers, man. You got to get those rookie numbers up. But I'm happy with this, and I'm especially happy with the consecutive losers, which are 10. So 10 losers in a row, which I have no problem with at all. This is actually the first time I looked at the consecutive losers and winners of this year, because I just don't feel them as they happen. If I have a lot of consecutive winners in a row, it doesn't do anything for me. It doesn't get me excited. It doesn't make me cocky or overconfident. I don't start over trading. And I can see that because I can just look at the trades I put in my journal and see that after a winning streak, there aren't like a whole bunch of losers afterwards, or the trading frequency doesn't all of a sudden increase exponentially. The same thing happens with consecutive losers. I honestly wasn't aware at all that I had 10 consecutive losers in a row. And the funny thing is, that was last month. That was in November. And as you can see, it dropped my trading portfolio with 0.82%, which is nothing. Which is also the reason I didn't even realize it happened. But what it does tell you, and what it tells me, is that I'm pretty good in risk management. I mean, I think I really got risk management under control. So that's really good to see. Hopefully we get to replicate this next year and get those rookie numbers up, right? Best 5 instruments of the year, the DAX, German 40, the Russell 2000, Bitcoin, Doge, and ETH. Doge was just a single trade. I think either 1 or 2 trades, but I'll go over those as well. And the worst 5 were Litecoin, Ripple, fucking Ripple. Ripple just absolutely skyrocketed and somehow was one of my worst 5 instruments. We got gold, again, Bitcoin, and Monero. So the message or the conclusion I get from the worst 5 instruments is that I should or probably will trade altcoins less next year, but we'll see. We'll see what happens. It's just good to write these down and make them part of your bigger annual trading review. What I used and I do use. I used it last year as well. This is and yes, those were some of my NFTs. This is Tom Dante's annual trading review. You can actually just download it from his Twitter. Go to Tom Dante, and you can see his post right here. So you can just download it, save it. It's pretty good. It's really good to go over this and think about every single question as much as you can, and write it down as well. Writing it down is really important. Just thinking you can remember everything makes no sense. Anyway, so let's go over a few of the worst trades I took, and some of these were really bad, man. Some of them were so bad you actually have to look for why you took a trade, which is never a good sign. So one of the trades I took on Ether was May of this year, obviously, because every trade is from this year. So the reason, don't be scared, by the way, don't think this is happening right now. This is a candle from August 24. I'll actually make it, fuck it. You'll remember. Here we go. Just to make it less scary for you guys. Anyway, so this is a trade I took. This is how I sometimes take trades. We get the thrust candle, where we get the structure here. So I'm thinking, well, break through this structure, out of the structure, get the last high pre-breakout, I got to be long this level here, right? Obviously. But then what we get in this, and I know this, I know I should not take this trade, but I still took it because sometimes you just do stupid fucking shit and you cannot help it. I mean, you can't help it, but you can't always help it. And the best thing you can do as a trader, just do less of the stupid, of the dumb fucking things you tend to do when you're either bored or stressed or anxious from potentially missing out profits, from wanting to be in the market, right? We always want to be in the market, especially if you like trading. And I really enjoy trading. I enjoy being at the screen. I enjoy looking at charts. I enjoy planning trades. I enjoy seeing trades work. I enjoy learning from losing trades. I genuinely enjoy all of it. So when I have no trades open, I do, and I still do, and I will next year as well, but hopefully less, take dumb trades. And this is a dumb trade because this is the drift of death. That's the way you call it. The drift of death is never good. If we get the breakdown and we get a pretty aggressive move back into the level, it is a trade that is much more likely to work out than this kind of price action, where you just drift into the level. This trade just really sucks. I mean, it really sucks. Again, the level was pretty good, and you could take it thinking, well, if you get filled on the last high pre-break, you get out at the first trouble area, the FTA, which would be this level here. So it's a really quick in and out trade, but that is not the way I trade. So I wasn't even looking to target this low. I was looking to target just, I don't know, new highs, equal highs probably. But there's absolutely no way. And of course, this is hindsight analysis, which isn't as valuable as analyzing markets ahead or in the moment. But yeah, in hindsight, I really should not have taken this trade. My stop was below this candle here. And it just nukes just straight through it, right? Could it have happened that we would have seen a bounce and this would have turned into a winning trade? Absolutely. But the funny thing is with trading as well, you can take really good trades that end up being losers. And you can obviously take really bad trades that end up being winners. And I made a video about this already, the difference between achievements and ability. The same thing is true for trading. You cannot and should not ever judge the quality of your trades based on the outcome of the trade, especially the individual trade. I mean, if you take 1,000 of your trades, you can obviously judge the quality of your trading. But you cannot judge the quality of a single trade based on the outcome of it. You just cannot and should not ever do that. But yeah, in general, I can't judge this particular trade and the quality of it because it just does not fit my trading strategy. It is just, it's just not a good trade. It's not a good trade. Let me check what this is. What is this? What is this? Oh yeah, this was another really just, if I just look at it and I think, why the fuck did I take this trade, man? It's just so dumb. Again, you know, we get a swing high here, right? Which isn't really a swing high. I mean, we get we have price going up here, right? So it does put in a high, but then the way back down here, I mean, it's more of it is considered a high, but I wouldn't consider it a swing high, but it's still structure, right? So we get this high, we get this high here, and then we get this candle over here, right? Which I then consider to be a thrust through the highs over here. The shitty thing is we have this high as well, which it did also break. But again, we didn't get the immediate retest. And as you know, I trade rounded retests only, which means there should be at least one candle in between the thrust candle, the breakout candle, and the retest candle. So if I trade this on the hourly, there should be one hourly candle in between. If I take it on the 4 hour, there should obviously be one 4 hour candle in between, etc. So what happens is we get the breakout, and then we get this fucking huge, almost a rounded top, and then we get the retest. This is way too late, too long. This again, you could come in at this, right, at this high, and target the first trouble area, which could potentially be this here already, or these lows here, or this low here. But again, I wasn't targeting that. That is not my way of trading. So I get the fill, and I just get immediately stopped out. I think my stop was below either this candle here or this candle here. But it's not a good trade, man. This price action should really be ignored. It doesn't lead to good trades. Now you could say, well, on the daily, right, the structure is a little more aggressive, a little less prolonged, if you will. But then there's no naked solid level to trade on the daily like you have here, right? This is an obvious thrust, an obvious naked level. If you look at the structure here, I mean, there's just nothing here, man. There's just nothing here. It was a really shitty trade. Then we get this trade over here, dollar Canadian. I am taking an open trade into the new year, most likely, with dollar Canadian, which is looking to be a very good trade to start the year off with. But I do take really shitty trades on this pair as well. So the reason I took this is because on the daily, I kind of like this level, right? We get the interaction with the level here. Oh my God. Here, move away from the level. We bounce from diagonal support, move away from support, and try and break through the level again. Something, well, that's good. If we manage to break out of this level, we got support here. This could be an interesting support resistance flip, right? However, there's absolutely no confirmation of a breakout, none whatsoever. There's obviously this candle here, which is rejection of a breakout. On the other hand, you did end the day with a hammer, but the position of the hammer is to me still kind of meaningless. So that is why this is already a shit trade to take, but I did not notice any of that at the time. This was taken when? This was taken January 11th of January, sorry. So we get the breakout, right? We get the highs, and we get a thrust candle, and we retest this high over here. And we just break down and just immediately goes to my stop. I'm stopped out, and we reverse. Not sure what happens afterwards. Let's see what happens. Start to move up. Now we start to move up, and now it's starting to look good. So when should I have taken this trade if I wanted to trade the actual breakout? I don't think there was a good moment for it. This one isn't convincing and doesn't break through the high here. So this is another weak candle. Now you could say this is the actual breakout candle, but then I would have targeted this low here. So on the hourly, I mean, there isn't a lot there for me at this point in time. So while the trade does eventually move into the direction I wanted to trade it to, at the time it wasn't a good trade. But taking the trade later than I did would have been better either way. Regardless of the outcome, waiting for this price action to develop would have been the better trade. You could say, and I should have said, all right, let me wait for price to close above this level here, maybe even this level here. Once we break out of there and we get a good retest, that will be a good level to trade at. But as you can see, we don't really get it. It's just chopping up, man. This is a horrible price action. So there wasn't a trade here in the end. Could have said, well, now that we have put highs in, maybe if we break out of this level here, there could be a trade there at a potential breakout on a retest. This candle, again, man, this is just killing you. If you're trading this, you're getting absolutely slaughtered. So yeah, let's move on. All right, then we got silver. This is January 25th, but I took this trade on the 20th. Now, what I did was I shorted this low right here. And again, man, this is just a really bad trade, man. It's just really bad. I mean, it isn't initially, right? It's not here. Here, it is still a good trade. Here, it's pretty good because you get the breakdown candle, right? Breaks down through this low, even this low. Every major low is pretty much broken. This low, it's a good level. It's a good level to trade. You could even fine tune it and say, well, I'm going to come in here or come in here. But I decided to go with this level here. So you're thinking, all right, this is pretty good looking, right? But then you get price action developing, right? You get this, and you get structure developing. And this is starting to be an issue. This is starting to be a really big issue because highs are starting to be put in here. This is price action. This is structure developing, and structure developing means potential new resistance once you are filled on the trade. So I should have pulled the order right here, maybe even after we move away from this high here, because once we move away from this high, this is just way too risky, and this is really turning to be potential resistance, especially together with this high here as well. So you'll see what happens. We move away from the level. I actually move away from the entry while getting really close to it, which is another invalidation for this trade. But I'm keeping it open. I'm just keeping it open. Another near fill. Again, moving away from the level. Man, this is just amateur hour, man. At this point, I'm filled. I'm probably asleep. Yeah, I'm asleep at this point as well. Oh my god. Maybe I actually forgot this trade when I was filled, which is even more ridiculous, right? So yeah, I'm obviously stopped out on this short. Initially, pretty good trade, but man, keeping just your trade open because you have to be in this trade thinking this is going to be a great entry, a great level. It's not. Once time passes, once price action develops, things can go from being a good level to being a horrendous level, which is exactly what happened here. Moving on to Litecoin. Let's see what we got here. Well, you can immediately, it just pops out at me what I did here and why this is a shitty trade. We get this high here, right? And if you think this is boring, well, sucks to be you. And you have to think, or you have to realize that I do this with almost all of my trades, right? I just go over them again and again thinking, why the hell did you do this, man? What is wrong with you? So yeah, we get this high, and then we get this thrust candle. right? It is a thrust. I mean, the thrust closes through these highs, and it does leave a very nice last high pre-break level. It is a naked level, so all in all, it's good, right? And you could say theoretically that it closes higher than these highs here. But I mean, if you're just looking at this is not convincing, right? This is not convincing at all. Were we to close all the way over here, just a really nice, convincing close through the level. All right, I would have, I would have not included this trade, but this is just a really weak candle to me. But I still wanted to be in this trade. Still thinking we would probably target these highs or this high here. So yeah, I'm filled again with kind of a slow drift, which is always bad. I get stopped out because my stop is below this thrust. We move away from the level, thinking, oh my god, here we go again. I was actually right on the direction, but then we moved down again. So this was just not a good trade. It wasn't a good trade. On the daily as well, there is absolutely no reason to think that this is going to go up. There's no bullish bias. There's no bullish candle. There's nothing there for me to go long. But I still did. And that is a mistake. And that is something I'm going to have to keep improving. All right, let's go over a few winners. And I obviously have a lot more losers than I do winners. There's a couple of things I want to say about that. First off is whenever I put on a trade, I always think to myself, this is going to be a loser. This is going to be a loser. And that's okay. It doesn't matter at all. If you want to get good at winning, you really got to be a good loser. And you got to keep your losses as small as possible. I remember when I did marketing and online brand stuff and blogging and everything, I'll always remember reading a book from Seth Godin. And I think the guy is a genius, but he keeps making the point that if you start up a business, a website, it doesn't really matter. Just try something and correct along the way, which is what I've always done with everything in life. But make the losses as small as possible. Make your mistakes cheap. If your mistakes are cheap, you can survive them. If your mistakes are costly or expensive or even fatal, well, that's going to get you out of the game permanently. So keep your losers as small as you possibly can. Does that mean you should always close a trade that is going against you? Absolutely not. I have found that if I get the feeling, and that is part of discretionary trading, if I get the feeling I'm wrong on the trade, I do close my trade manually, which has saved me money over time. Instead of just having my stop being hit. But as I just showed you on the max drawdown on the stats, right? The consecutive losers only caused my portfolio to decrease with 0.82%, which is absolutely nothing. And that is the huge difference between gambling, in my opinion, and trading. And I know there are a few professional traders out there who will say, no, trading is the same as gambling. And I get the point, I get the argument. I just don't agree with it. And I guess it depends on the game you're comparing it to, because gambling as a category can mean anything picking between head and tails or fucking poker, right? There's many different things, many different games that fall within the category of gambling. But when you're at a birthday party, especially if you're new to trading and you're telling somebody, well, look, I'm getting into trading and I'm really liking this, I can guarantee you 100% there's going to be at least one person, usually female, no offense, and she's going to tell you, well, isn't trading the same as gambling? And it isn't, because if you compare, say, trading to picking between heads and tails, right? There is no amount of research or pattern recognition or any other skill set you can acquire, you can develop to get you better picking between heads or tails. There is nothing but chance standing in between you being right or you being wrong. Now, while most price action is random, there are certain moments where price action obviously isn't. And if we as traders can wait for those moments and only take trades at those particular time, which is the hardest thing to do, we could potentially make a profit at the end. Aside from the fact you can gain a lot of skills, a lot of insights, both fundamentally and technically into financial markets to get you better at this. If this were the exact same thing as trading, as gambling, that would mean you can pick any random person off the street, put him at the computer, have a seasoned, skilled professional trade the same markets as the random person, and at the end, the result should be kind of the same. But we all know that's just not the case. That's just not what happens. Anyway, so yeah, my losers are really small compared to my winners, and sometimes there are big winners. And one of those big winners this year was Doge. All right, so this is Doge, and this was a winner. This was beautiful, and while this may look like a random level, this chart is actually pretty new. The older Doge charts have a weekly level over there. I think it was around here. Yeah, we get this level here, this weekly high. Okay, now this weekly high here, these highs. So those were the highs I targeted. And this trade just did not look back. I traded this on the daily. We get the highs here, get the structure here. You can really see it's trying to break out of this 3-month bottoming structure. We get the breakout finally. And I long the retest on the daily, this level here. Get the fill, and this trade did not look back at all. I mean, this is obviously partly due to luck, because it could have done literally anything, and instead, or in the end, it decided to just run vertically, which at this point all crypto markets did. This was around the 4th of November. No, it was the actual 4th of November. So I think this was the date Trump won. So we got the post-election rally, and it was just beautifully timed, man. This is well timed, good entry, and my stop was below the low of the day before the breakout, the last day rule. So while this may seem like a tight stop, it's still over 5%, I think it was. Yeah, it's like 5.5%. So the R on this is absolutely huge. It's a 24R trade, which, I mean, these are outliers, right? But these are the outliers that add most to your bottom line at the end of the year. These don't occur often, but if you can just survive in between these trades, it'll be worth your time, man. It'll be worth your time. And I think I've mentioned this in another video. There are traders that will post screenshots like this all the time, as if they only take trades like this. But that is, like I said in the beginning, it is impossible. It is statistically impossible to only take fucking 20R trades and be a profitable trader. They just barely happen. It just almost never happens. Then we got ETH, but I think I messed this chart up because I used it for the other ETH chart over here. So I don't know what the hell I wanted to show you guys here. So I'm just going to skip this one. Russell 2000. Yeah, I've shown you guys this plenty of times already. This was one of the better trades last year. This year, if you watch this every week, you've seen this trade already. But it just, again, it's really nice, and these are the trades you have to remember. you have to remember the way they look. You have to remember the way the market felt at the time. You have to remember the way you felt at the time. What were the conditions? What was going on mentally? Because these things have to align for you to take these trades. And the most difficult part of trading is waiting for trades like this to set up and then taking them. Because if you know what you're waiting for and you have the confidence to pull the trigger once the chance arrives, without overdoing your risk or without underdoing your risk. I don't know if that's a word, but that is the type of trade you have to look for and just take. This was a really nice trade. Obviously, it went way higher afterwards, but this was still a 4.35 hour trade, which is just really nice. Then we get Bitcoin here. This was one of the many trades I took on Bitcoin this year. A lot of them were profitable. We get the bottom here. First, we get the daily, right? The daily is looking like this at this point. Get a downward sloping trend line. Interacts with the level here. Almost does here. Again here. And then we get a pretty big candle. But support still isn't broken. It's not closing through support. Instead, it really bounces back aggressively. So I'm waiting for price action to develop, and we get price action here. A lot of different highs. And then we get this candle, which breaks out to me through the highs here. We get a pretty quick retest of the level, and I am filled. So then the trade begins, and it's not really doing much or anything at all, just hour after hour. I'm not watching the trade actively. Then the trade starts moving up. I'm thinking, oh, nice, but we go back down. At this point, there's no reason for me whatsoever to move my stop up. So trade comes back to the entry, starts to move away. And then when this candle occurs, my stop is placed below this candle here. So my trade is in the money and is, even if I'm stopped down, it is still going to be a winner. When this candle forms, I'm putting my stop below this one. And then my take profit is hit at the lows here. I think that was a good level to target and potentially put on a new trade once we close through this level and then potentially have a retest. But yeah, this was a very, very solid trade as well. Again, the R on this was exceptional. It's 6.3 R trade. I usually go for trades that have a 3 R. Those just work best for me. 2.5, 3. That is what I look for at least, and that I have to do that because, again, my win rate is pretty low, but not unusually low. I mean, there's professionals, guys like Jason Shapiro, who have win rates of about 30% as well. Peter Brand, almost the same. Baba, this was a really nice trade too. I call this multiple times on Twitter, and I know a couple of guys who took the trade with me, but I don't think they closed around the same level I did. So this was a symmetrical triangle. We get the breakout, and I buy the breakout. I think it was at the 19th. 19. This was nothing. I buy at market on this day, the 18th, and then we just move up, man. And the gapping up is just lovely. It's lovely if that happens to you because the market closes, right? And then you get the pre-market trading and it just trades up aggressively. And you're thinking, oh my God, when the market opens, I'm going to be in pretty good profit. So I closed most of the position at this high. I tried going for this high as well. Unfortunately, didn't get it. So then I am stopped out on the trade I think it was this day after the gap down. Gapping down is less fun than gapping up. But yeah, a really, really good trade nonetheless. It was an exceptional trade. So very happy with that, how that turned out. Yeah, those were the trades I there was obviously the DAX trade as well, which was pretty recent, which you guys have also seen. I think I've mentioned it a couple of times. I think it was this retest here, this immediate retest, right? With the breakout, so the highs, all these highs, get this breakout candle, almost the immediate retest, just a single hourly candle in between, and just immediately goes up to target this high here. So that was a very good trade as well. I took a bunch of good trades on the DAX this year. But the more you do stuff like this, and the more you start learning what you're looking for, what your ideal trade should look like, you can start to really wait for it. And again, that is what trading is all about: bringing or having the patience to wait for your trades to actually set up, instead of just freewheeling it or thinking, well, I haven't put on a trade in a few days, let me just try something out. Yeah, that is no bueno. That is no bueno. Yeah, I know these are only like 8 or 9 trades, 10 maybe even. So that isn't significant. Especially, I just told you I took 346 trades. So obviously there are a ton of trades that sucked. There are a ton of trades that were good. But most of the winners look the same, and most of the losers also look the same. Those are just the trades that you cannot do anything about. I mean, obviously you can do your best and see what you can do to take more of the winning trades and take less of the losing trades. But I think you should start optimizing with the trades that occur frequently, where you can obviously pinpoint what you're doing wrong. If you're just looking at every single losing trade thinking, what can I improve here? I think that is I want to say a losing man's game, but I don't know if that is a phrase that is actually used, but it sounds pretty good. Because losing trades are always going to be part of anybody's trading. They are a given. Anyone telling you losing isn't part of trading is an idiot. Anyone telling you you can get a win rate of 100% is a moron, an absolute retard. There's no way. Losing is a part of trading, and it's an important part of trading. So optimizing all your losers is just useless. So look at the losing trades that have a pattern to them. Because if you see stuff you're doing wrong, for instance, with the Ethereum trade, if you're buying into a slow drift of death, if you do that frequently, if you see that occurring more often than you'd like, that is something you can actually change. With winners, exactly the same. Are you just buying a naked level, or is it a naked level that is part of a larger classical chart pattern, for instance? Which kind of breakouts work best for you? Is it a head and shoulders top? Is it an ascending triangle? Is it a rectangle? Try and see what worked best for you most of the time, and do more of those. So again, you cannot just have a general concept of do more of the winners and do less of the losers. You got to see what those losers have in common and what you can change about them. And the same goes for the winning trades. What do the winners have in common? Because if there's no common denominator, again, you cannot do anything about it to replicate the results. So yeah, I hope this was slightly informative. If not, well, you just wasted an hour of your life, and so did I. But I'm going to be back here in 2025. 2025 is going to be the year where I'm either going to stop making videos or I'm going to keep doing this. I'm going to give myself 1 year. And if it doesn't work out, it doesn't work out. So yeah, if you want me to keep doing this, please let me know in the comments. Like this video if you haven't done so already. And yeah, I'd really appreciate it if you could subscribe to this channel as well. Then there is nothing else for me to do to wish you a very, very happy new year. This was a good year. 2025 is going to be a better year. I can feel it in my bones. I can just feel it. It's going to be a good year for all of us, guys. Unless you don't know how to short markets. If you don't know how to short, it's going to be a bad year. It's going to be a bad year. Or maybe not. We'll just have to wait and see. Anyway, guys, have a great New Year's evening, and I'll see you back here at the charts next week.